The banks are dealing with a crisis right now. It's been ongoing for several months. This is related to what the Federal Reserve and other central banks have been doing, and I think it's really important that you pay attention. I'm going to show you some data today that is going to be wild. We're talking about thousands and thousands of people being laid off. Hopefully you're not one of those. I'm going to show you what's happening and what will occur in the following months. Does that sound interesting? Let's begin. Very first thing, UBS preparing to cut over half of Credit Suisse workforce. If you remember very clearly, I told you that this was happening, and in fact, that we would see more and more of it simply because whenever there are mergers and acquisitions, we always see the layoffs. They look for what they call redundancies and what, again, they call increasing productivity. They want to get rid of as many people as possible. You might be in a group of 4 people in your area and they say, okay, Jim, he's gone. And now we're going to give his work to you and you and you. How does that sound? Do you like it? No? Maybe you'll be next. And this is the way they do it. They simply give out everybody else's work. Have you ever experienced this yourself? When the guy behind me got fired, I remember that day very much many years ago, thinking to myself, I could be next in line. This is not a very good thing. It's happening in the banking industry right here today. And we go even further than that because UBS plans to cut Credit Suisse by laying off 35,000 workers after burying the struggling bank in a fire sale. We're hearing 45,000, 35,000. These numbers are being thrown around. All I know is that thousands and thousands of people are going to be laid off right here, and then they'll have to find another job. Hopefully they'll be able to do so, but we are in a precarious moment where in the banks, for these type of businesses, there may not be jobs. I just saw a potential situation for RBC. So Canada's dealing with this as well. They said, the CEO said, we basically overshot by thousands of employees. Does that sound familiar to you? The same exact thing for the tech industry in the United States. A lot of these businesses, they changed their mentality so much during 2020 that, oh, this is a whole different world, but they forgot about the fundamentals. And that's why they're getting smacked left, right, and center right now. Bundesbank may need recapitalization to cover bond buying losses. What are we talking about here? A central bank that is going to need recapitalization. Is that what I'm hearing? Okay. German audit office report could make it harder for the ECB to carry out similar programs. I just don't understand how in the world this happens. The possible Bundesbank losses are substantial and could necessitate a recapitalization of the bank with budgetary funds. I mean, you can see this for yourself, but these banks, they are doing this whole purchasing nonsense, just like the Federal Reserve is doing, and they had dealt with losses. Yes, of course. They shouldn't have anything to do with this. They're trying to do this stimulus, but it doesn't help you and I. It's all about the banking industry. They want to keep the zombies alive. Did you realize this? That these zombie companies exist today. What does that mean? Well, through some sort of stimulus, through some sort of measure, they're being kept like as if it's a dead body and they're just pumping blood through it. Well, that doesn't count. It's dead. It's gone. You just can't do this intervention and keep it going saying, you know what, we got the life support machines on and we're going to keep it going. No, you've got to pull the plug. Different story, but anyway, I think it's important that we realize when the financial system is in this position that it's in today, we have to start realizing what we can do as individuals. And the very first thing is we got to lose faith in it. That's step one. We'll talk more about that here in a second. Stocks are bouncing back after some strong U.S. economic data gave a boost to the consumer discretionary stocks and investors piled back into the AI trades. The strong consumer confidence report will likely suggest that expectations are not for the labor market to deteriorate quickly, which should confirm expectations that a recession will not happen this year, but most likely next. So 2024, that's the new recession. No, not going to happen in 2023. Therefore, the Federal Reserve is not going to cut in 2023. That's becoming the new thing now. Are their inflationary expectations still built into the labor market with what the Fed really needs to worry about? Is that it? Well, that's what they're saying. Look, the banks are where we should be focusing our attention, not AI stocks and Nvidia. We know that there's going to be an infinite amount of cash flowing into them. We have to understand what's happening fundamentally here. What's happening with these banks is that they're being told, oh, they have to have some extra cushion in their companies to withstand any problems. Barely a difference. They barely did anything, but they passed all the stress tests, so they don't need to worry. That's what they said. The Federal Reserve said that these banks, all of them, remember this, remember I said this. The banks all passed the stress test, but they just gotta increase their reserves. They gotta, their capital requirements will increase a little bit. Very, very small amount. How in the world can this be? It's as if we're in the twilight zone, my friends. So 2 things in this article was what I think is important. Markets have also proved remarkably resilient with only a mild tightening financial conditions. Despite the rapid game of catch-up by central banks in the past year, there have been very few financial accidents. It's as if they're ignoring what has happened with the banks. Multiple bank failures. And they're saying, hey, very little. Okay, if you look at the actual stock market index, that's going to tell a very different story than what's actually going on. Look how many banks have already failed. And we're not at the end of this. The worst always comes at the end. If corralling inflation requires the Fed to implement additional hikes to the policy rate, stocks with quality attributes like strong balance sheets, low volatility, and high returns on capital should outperform. That, of course, is a fact because there will be concerns here. There will be investors looking at this and saying, okay, where do we apply new capital to? Are we going to put it all into Nvidia? That's up to you to decide. 300% run on the stock. But they want quality. They want to put where we know that they can weather the storm. That's what investors, big investors, not people with the 7 shares of Amazon. We're talking about big investors. That's what they're going to be looking at here for the next few months. And by the way, the expectation is the Federal Reserve will be increasing again. That was not the expectation, let me tell you. This is important to connect it in with it. Energy dominates when inflation is elevated. So now you're learning what to do, the takeaway. This is what's happened historically. This chart goes back to 1940, and you can see that black area, that's the energy sector. And right around the times that we see, by the way, the chart is the CPI year over year. And so during these period of times, we can see that usually when we get some higher inflation, that energy does well. That's not really a surprise, but think about that. If you believe that energy, and I talked about this all through 2020, do you believe that inflation is going to stay high? If so, then energy could do well, or at least you could, fare better than the average. That's the kind of the way to look at it. If you believe inflation is going down, well, then we could see this go down as well. It all depends on what your idea of inflation is. I believe that we could experience temporary deflation if something trips up, temporary deflation, and then the central banks will rev up their engines. They'll start those printing presses, and they will quickly, rapidly devalue your currency at the expense of inflation. They will not allow deflation to occur. They can destroy you much faster with an inflation, and they intend to do that. Ben Bernanke talked about it years ago. Morgan Stanley sees the Fed hiking rates in July after Powell's speech. He said that the job is not done. We have a lot to do, and that it looks like maybe a couple more this year. So that would be interesting to see it go up 25 basis points and then again 25 basis points and then kind of assess the situation from there. So like that really, if you look at the dot plot and so on, what is the dot plot? It's basically just the expectations of the members of the Fed, kind of saying, okay, where do we think interest rates will be at such and such time? And so the expectation was above 5.4% for the Fed funds rate. Imagine where mortgage rates are. Imagine that. If the Fed funds rate hits, I mean, we could actually see mortgage rates go beyond. It was kind of at that 7% for a little while. What if it goes to 8%? What if the belief is that inflation is going to be here for years to come, and that's understood? That could present itself with, some higher mortgage rates for a long time, and creating a problem, of course, not just for the real estate agents and the mortgage brokers, but the whole system, as in these areas where, quite frankly, I know a lot of people have been talking about this. Airbnb has been taking up these homes, condos and houses, single family homes, all kinds of things. So technically they're not vacant. Somebody comes in there on occasion or what have you, but that's just not making up the all the necessary expenses. So they're a landlord in this case, they're a business owner in this case, but they're not making enough to bring this through. And if mortgage rates are going to stay high, at some point they've got to call it quits. Let me know what your thoughts are on this, the whole Airbnb fiasco, and how everybody, because of what's happening on social media and stuff, people are being led to the slaughter. And I'm going to be changing that here in 2023. Stay tuned. But I think that it's important that we just look at that and think, I think we could be seeing some more inventory come on the market in these, and that will be in the big cities, by the way. That's not in the little, tertiary cities and so on. So watch out. This is one that requires a whole video in itself, but you probably have heard it already. JPMorgan mistakenly, very funny, deleted 47 million records according to the SEC. Your friends at the SEC wanted you to know that. I think there's probably some important stuff related to the 47 million records. Now, let me tell you a little bit based on my knowledge, that emails just don't get deleted. And even if those emails do get deleted, there are records of information being stored of where it went from and to. The time, the subject line, the sender receiver. Those pieces of data wouldn't be deleted. You could argue the body of the message gets deleted, like the actual email, but the record, that transaction essentially would still be stored. So that information, and by the way, you could get rid of that. But what I'm saying is, if somebody said, oops, accidentally, I just deleted 47 million emails, that data would still be there. Okay, so let's make that clear. This was intentionally removed. Okay, and then last but not least, hundreds of attendees. This is talking about the whole climate conference that happened in France. This is where I want to leave it off with you. Hundreds of attendees will attempt to lay the foundations for an overhaul of the entire global financial system by adapting the post-war Bretton Woods institutions, the IMF and the World Bank, to today's challenges. So they are going to do different things. The IMF and the World Bank, right now, look at this. They want the world, I can't believe this. Look at it, okay? The United Nations estimated last year that the world needs to allocate $1 trillion a year between now and 2030 for developing countries besides China to respond to the climate and biodiversity crisis. Where in the world is $1 trillion going to come from? That would be, for the United States, let's say a couple $100 billion a year. Are you serious? Are you kidding me? The inflation is going to be wild. They're going to do it anyway. Now, previously, I was talking about investing, talking about looking at this. I'm going to develop an entire program around it. I've already started. I'm going to be recording that shortly, and I'm going to bring this to you. But if you want the formula for free, it's here for you. This is the money mirror method. It teaches you how to invest based on the overall structure, based on the fundamental liquidity in the system. And I'll teach you that right here. Click this video. I'll see you there.